Hello and welcome to Any Answers Answered for November 2023. As ever, Tim and I have picked a couple of questions from the pages of Any Answers to have a look at. Our first question this month comes from, now this is tricky, Adam ER or A Dharma, I'm not sure, but Adama has asked the question relating to entrepreneurs relief, Tim, or of course business asset disposal relief. And it's about a holding company. The question is, a shareholder and director own a third of the shares in a trading company with a third-party limited company owning the other two-thirds. As dividend levels and timing are effectively controlled by the majority shareholder, they are worried about the fact this person could go in and out of various tax bands, and therefore he's considering setting a new company to hold the shares via a share-for-share exchange. This would create effectively a holding company for the shareholders for their 33%. His concern is that should in the future he wish to sell the shares in the trading company, presumably by selling holdco, would he still be able to claim entrepreneurs relief as the new holdco may not be a trading company? Let's start with that one, Tim. Is there a problem selling a holding company of a trading company?
Yes, there is, although you worded that in a way that caught me off guard momentarily. Before addressing the substantive issue, let's just agree that Adam ER should actually have been talking about business asset disposal relief, entrepreneurs relief, which was preceded by business asset taper relief, morphed into business asset disposal relief a few years ago. So BADR is what we're talking about, bad relief as the acronym gives it. And the first comment, there are only 4 replies to this particular posting, does make the point that it's BADR we're talking about, and that is only available on shares in trading companies. And a company such as the one mooted in the question that exists solely to hold a minority shareholding in a trading company, that is not a trading company. Before going further, it's an interesting idea, though, when it comes to dividend policy, because you can see how this particular shareholder with the 1/3 holding may very well prefer not to take dividends, but to have them retained within the company as distributable reserves, whereas the majority shareholder, the company that owns 2/3 of this trading company, wants the money out. And of course, dividends received by that 2/3 shareholder are tax-free within that company, because dividends from one company to another company don't attract tax, courtesy of Gordon Brown. So yeah, that's an interesting idea. And I quite like that as a planning point, because then the dividend that goes to the company set up by the 1/3 shareholder can remain within that company and not be distributed. But the idea that you would then qualify for the 10% capital gains tax relief, I'm afraid, is a non-starter, because in order to qualify, the shares that you're disposing of to qualify for business asset disposal relief must either be shares in a trading company or shares in the holding company of a trading group. It could be a single subsidiary. But here we're looking at a holding company that has only got, as the first correspondent says, a minority shareholding in the trading company, and that won't be sufficient to qualify for business asset disposal relief.
Yeah, so I can see why my question made it more complicated. I asked about the holding company of a trading company. In fact, it's the holding company of some shares in a trading company, and a minority interest at that. So very, very different. And the answer, I think, very definitely no.
It would achieve the dividend objective, but it wouldn't achieve it would lose the potential for business asset disposal relief.
The second question this month comes from Ruggles, and that's a very interesting question, actually, relating to QIP's quarterly payments of corporation tax. The commencement rules for determination of liabilities to QIPs clearly states, says Ruggles, that they are effective for accounting periods beginning on or after 1st April 23. Since the reference in the regulations to associated companies does not take effect until 1st April 23, it follows that even if a company would have had sufficient numbers of associated companies at 31st March, they don't count because they cannot be recognised as such till the 1st of April. However, there is a considerable amount of commentary on various firms' websites that does not agree. Well, Tim, let's cut to the chase here. Do you agree on this particular topic?
I'm not going to be tempted to cut to the chase, as you put it. And that's because I think we should start by a very quick review of the quarterly instalment payment regime. And let's start by thinking of a singleton company that has, until now, paid its corporation tax 9 months and a day after the year end, but whose profits are increasing. Now, you tell me, Giles, at what point will that singleton company with, say, a 31st of March year end, at what point will that company be liable to make quarterly instalment payments? I think there's a threshold which is mentioned in the Any Answers thread of 1.5 million. So let's suppose this year, to 31st of March 24, the company breaches the 1.5 million for the first time. Does it have to pay quarterly instalment payments this year?
No, it doesn't, because if you are large, over the 1.5 million, but not very large, that would be 10 million, then you fail the test of being large, but you get a year of grace. So the first year that you fail the test, you don't have to pay the tax. So it would be the year after that was relevant in this story.
Exactly. So that is a very important point, that in the first year in which you fail the test, you're not liable to quarterly instalment payments. Now, let's introduce an associated company. Let's suppose you've got two companies, A Limited and B Limited, that are associated. They're not under they are under common control. They're not in a group, but they are associated companies. And one of those companies just poodles along with profits of 200,000 or 300,000. The other one is looking at profits of 800,000-900,000, something like that. And that now means that the 1.5 million is to be divided equally between the two companies. And so the threshold is 750,000. Well, the company with the higher level of profit, 800,000 or 900,000, breaches that 750. And this year, to the 31st of March 24, is the first year in which it has to have a reduced threshold, not 1.5 million, but 750,000. So this year is the first breach. But unless it breaches also the 5 million higher threshold, it'll enjoy the period of grace and won't be subject to the QIP quarterly instalment payment regime until its year ended March 2025. And the interesting suggestion, which they very quickly resolved from, Ruddles I'm talking about, the interesting suggestion that, in fact, you don't need to take into account any associated companies that might have existed before the 1st of April 23, doesn't actually operate like that. We simply look at the current year. Are there associated companies? Doesn't matter when they became associated, as long as they were sometime during the current year. Divide the threshold accordingly. If that is the first time, then you'll be subject to QIPs, not for this current year, but for next year. So it's not intuitively obvious, but one does need to work through. And we've said that the way in which the associated company rules have been brought back in, perhaps we should have introduced that point earlier in this item, the way in which the associated company rules have been brought back in this financial year because of the reintroduction of a differential tax rate, 19%, 25% corporation tax, has resulted in a return for quarterly instalment payments to the associated company regime, which had until the 1st of April 23 been a group company regime. So it's all to do with the way in which we used to divide between number of companies in a group, but we now go back to the old divide between associated companies. I'm beginning to get a headache.
So much to think about on association, not just am I paying at 25, am I paying at 19, which most of us focus on, but also these other issues like quarterly payments as well. That's all for this month. Do join us next month when perhaps it'll be your question we have a look at on Any Answers Answered. But for today, bye-bye.